Hello and welcome to our special coverage of the third G20 finance ministers and central bank governors meeting here in Gandhinagar. Negotiations have been tough, with countries condemning Russia's war in Ukraine. Things have got more complicated with Russia withdrawing from the Black Sea Grain Initiative. I caught up with Germany's central bank president Joachim Nagel on his outlook for the global economy and negotiations here at the G20.
When all the governors and finance ministers met in Bengaluru for the first finance ministers and central bank governors meeting, there was a lot of tension in the room over the Ukraine war. We could not have a communique. Is there less acrimony, less tension now, or would you say the atmosphere is very much the same?
I think it's very similar to Bengaluru. I think we are still living in very complicated times. So the atmosphere in the room, I would describe it as a very professional atmosphere. But nevertheless, the war is ongoing. So many of the countries in the room condemned this unprovoked war of Russia against Ukraine. This is still there, and we have to deal with it. And so this makes the discussion not easier, this is for sure.
Right. I would like to ask you, as the war continues, what are some of the biggest challenges that you see for Europe and the global economy?
I think I'm a central banker, so the challenge I see is still on the inflation side. I think we have to do our job here. Inflation is it's still much too high. So we hiked 8 times in the euro system, and there's more to come. We have our meeting next week, so I expect another hike for this meeting. But in a global context, I think we have to solve the debt issues of some countries. We have to come up with sustainable solutions. Some of the countries, they have to do their homework. So the mixture of all the geopolitical tensions, the situation we have on the inflation side, it's still a very complicated one. But G20 is a very important format, so I can congratulate the Indian government, my esteemed colleague from the central bank. They're doing an excellent job here to bring the different parties together. This is still helpful there.
When it comes to further rate hikes, are we expecting a 25 basis point hike now?
This is my expectation for the next meeting of the Governing Council of the Eurosystem. So this is what was said by Christine Lagarde in her press conference in June. And then we will see. Then we have our short summer break. We will have our next meeting in September. And then we agreed on the data that is coming in. On that basis, we will decide what is next.
Right. You spoke about debt restructuring being a very important issue for G20 members. What has been the role played by China so far? Do you think China is making negotiations difficult by asking MDBs to take a haircut on loans?
I'm not sure. I will not speculate here, but it is clear that China is playing here an important role. China is a very important part of the global economy when it comes also to the debt issue. So if there is a solution, so China has to be part of the solution. This is absolutely for sure.
Right. On the possibility of a recession, what is your outlook?
I think when I talk about my country, Germany, it looks like that we had a kind of a technical recession over winter time and in the first quarter. Now it looks much better for the second quarter and what we expect for the rest of the year. It will not be an outstanding development for 2023, so we are still expecting a growth rate. This is more or less pretty flat. But for the next year, growth might pick up. We expect for next year 1.2, and for 2025 for Germany 1.3%. So yes, it is not exceptional, but compared to where we started last year under these really complicated circumstances, it is something we achieved over the last 12 months.
Now, between the meetings in Bengaluru, Washington, and now in Gandhinagar, we've seen bank collapses in the United States. We've seen a crisis with Credit Suisse as well. What lasting impact do you see on banks in Germany, banks in Europe?
So banks in Germany, banks in Europe, they are robust. So the financials. So I do not see that as a financial stability issue. We had all these idiosyncratic cases, like you alluded to, Silicon Valley Bank and so on. So this is different from the financial crisis we saw over the last 10 years. So it was good to do a lot after 2008 to make the financial system more robust. We did a lot On the banking side, they are better capitalized, their liquidity situation is much better, but there are still some blind spots. Now we have to work on these blind spots. So there's no time for complacency, but there's no financial crisis.
Right. You mentioned that the room yes, there is tension in the room, but it's moving along very professionally. Are there some issues where you are not satisfied with the kind of progress and the pace of negotiations at the G20?
So things are moving slowly, this is for sure, and I have to come back to the Russian case. I think we shouldn't forget what happened yesterday. Russia withdrew from the Black Sea Grain Initiative, and we are discussing in the room what we can do for the most vulnerable countries. This is a little bit strange, so this is something we have to address. We have to really tell Russia this is a no-go, and G20 should go back to where G20 started. It was an overall initiative to help the most vulnerable countries to overcome the debt issues, and we should concentrate on this, and Russia has to stop this war.
Can there be any communique without strong condemnation for Russia's role in Ukraine?
I don't believe so. I think this has to be, in my understanding, in this communique. We cannot exclude this. This is the major problem. I think this was addressed by so many countries in the room, and I couldn't agree more.
Right. Finally, on cryptocurrencies, we asked the Italian governor this as well. The Financial Stability Board has come up with a cryptocurrency framework, at least a guidance paper. How important is it, considering there are still divergences among nations about how to move ahead with the roadmap? And what can we realistically expect? What is your view on whether cryptocurrencies need to be banned or how countries should regulate cryptocurrencies and stablecoins?
You said now several times cryptocurrencies. This is definitely not a currency. I do not know what cryptos are, but they're definitely not a currency. So we can maybe talk about crypto assets, but my position here is pretty clear. I think we need a kind of a regulation. I think a minimum standard of a regulation, but minimum standard means for me a tough minimum standard when we're talking about regulation in terms of cryptos. So I believe there is a lot of gambling in the crypto space, so we have to, yes, we can allow this, but at the end we should prevent that the taxpayer has to take the bill. And this is what we learned from the past financial crisis. So I'm pretty much in favor for a strict and robust crypto regulation on a global basis. This is of utmost importance. We shouldn't allow that there are some niches that they can put their business there. We have to really take what is necessary to really prevent this.
At this G20 meeting here in Gandhinagar, central bank governors from around the world discussed the global economic slowdown, the inflation situation, fiscal consolidation as well. I caught up with Ignazio Visco, the Italian central bank governor, and spoke to him about the possibility of a global recession and also what kind of regulations do we need on crypto assets.
Well, first of all, I think that we can avoid a recession. There are no hints of a global recession, and those countries where monetary policy has to be in the restrictive mode can avoid having a recession. We call, in the economic jargon, a soft landing. And I think we are still in that realm of possibilities.
Right. I would like to ask you about the possibility of further rate hikes by the European Commission, by the European Central Bank. Are you favoring more rate hikes?
Well, first of all, we have been raising rates at a very high speed and for a magnitude which is really consistent in the last year. 4 percentage points is the change with respect to June 2021. This has followed a pattern which has reduced over time. First 75 basis points, then a sequence of 50s, then a sequence of 25. We might have something still to go, but my impression is that we are close to the peak. The question is not really how high it will be, but how long we will maintain our rates in restrictive territory in order to achieve a price stability target that we fix at 2% in the medium term.
Do you feel that we've done enough with rate hikes now? Further hikes could start impacting the economy negatively?
Well, first of all, I think we might have something more, but not much. I think we have to wait and have the effects of monetary policy decisions, that is the rate hikes, to take place, because monetary policy acts with lags, and so we still have to have the full effect in the transmission of monetary policy changes, of interest rates hikes. We have already seen hikes in the credit market. We have seen that the credit conditions have deteriorated and that demand for credit has substantially been reduced. Now it's basically flat, but the effect of that on demand still has to come. We have observed mostly an inflation due to cost pushes from the energy side in Europe, much more than elsewhere, because of the natural gas, which has really had a massive increase. This has been passed through to final prices, so the core inflation is still a little bit stubborn, but my impression is that as energy prices have dramatically fallen now, we probably should observe a come down of this core inflation. There are risks. One of the risks is food prices due to what was still happening in Ukraine.
I would like to ask you about your outlook for growth for Europe and for the world, and key challenges for the global economy.
Well, first of all, Europe, as you may know, is stagnant. Maybe some technical recession we have seen on average, with some countries particularly resilient, and among them Italy is one of them. These countries have the benefit of a substantial increase in service demand, which compensates or more than compensates the fall in manufacturing. The reduction in manufacturing is the consequence of the global slowdown. So in this sense, globally there is a substantial reduction with respect to what we expected a year ago, or perhaps even a little before the Russian invasion to Ukraine. And my feeling and our projections is that this slowdown will remain. We started with that in our discussion, in our conversation. It will remain for few months, probably next year it will not be a buoyant year. In Europe, the same. The strength in the service sector is mostly the result of the end of social distancing from COVID-19.
Right.
It is the use of accumulated savings, which were forced by the impossibility really to consume in 2021, and it might continue for a few months, notwithstanding the terrible weather conditions that we are experiencing also in Europe due to climate change.
On cryptocurrencies, the Financial Stability Board came out with its report yesterday saying that there must be very strict accountability measures, disclosure norms, redemption norms for cryptocurrencies and stable coins. How do you see this? Do you think the G20 will come to a consensus on a cryptocurrency trade?
I think more or less this discussion is shared. The Financial Stability Board, I am a member of both the general and the restricted, the steering group of the FSB. We discussed this. Even the Bank of Italy is making a number of analytical analysis. My view is that we have to distinguish. There are cryptocurrencies that really have no backing and no intrinsic value, and we should refrain from really encouraging, we should encourage people to be very careful with this. And there are cryptocurrencies, stable coins, which have some value. We have to, as it is in the report, be very clear on the risks and how to minimize the risks in their use, especially in the payments.
On that note, we take a short break, but don't go anywhere. Our special coverage of the G20 meetings here in Gandhinagar continues. Welcome back. You are watching our special coverage of the G20 meetings here in Gandhinagar. Debt relief is a major issue for nations, with many saying there can be no formula on debt restructuring without China's support. Listen in to what the South African finance minister told CNBC-TV18 about his expectations on a debt restructuring formula and G20 priorities.
You know, the tradition, there are standard issues on the agenda. And each presidency gives it its own nuance. And I think India has quite performed well in terms of the logistic and so on, even on content. They've put together a team of experts which is looking into a number of topics. And in that sense, I'm quite hopeful in terms of the progress we're likely to achieve.
From the point of view of South Africa, would you lay out certain priorities which you feel are extremely important for a country like yours?
Look, first and foremost, not only for a country such as ours, even for our neighbors, a critical aspect is a debt relief issue in terms of the common framework. That to us is important. The second set of issues is the climate finance agenda. It's quite an important issue as well. So and lastly, how do we continue to prioritize the SDGs? In other words, the poverty aspect reduction aspect should not be left behind as part of the discussion.
You know, we are also getting a sense that China has not been very responsive when it comes to the debate over debt restructuring. They've been asking MDBs to take haircuts as well. Would you agree that China needs to play a more proactive role here?
Look, I would say most of the signatories to the common framework need to play a progressive role in the realization of the common framework. I understand China has been more exposed than anybody else into the developing and the distressed nations, and therefore there would be some worry from their side as to the implication of the debt relief.
Right. Finally, I would like to ask you, do you think the differences over the Ukraine war will make any kind of consensus difficult at this G20 meeting?
Depending on what would be focusing on.
Is the mood in the room very hot?
No, I mean, I've been around since the beginning of the war in April last year. If you ask me, the mood is completely changed. There's greater consensus and a greater appreciation of the differences.
Since the beginning of India's G20 presidency, there's been a lot of tension in the room with the Russia-Ukraine war. Even now, the G7 is sending a strong message to Russia to bring the war to an end. We caught up with the president of the European Bank for Reconstruction and Development, who is putting on the table the need for reconstruction of Ukraine and rebuilding of critical infrastructure there. Listen in.
Absolutely, yes. It's very important to continue to support Ukraine on the economic ground during the war, because it's very important for the country to be able to continue to survive, and then to prepare the reconstruction. And we as EBRD are very much involved into that, and we are discussing with our shareholder on possible capital increase to be able to support Ukraine in the long run.
What is your assessment? How much would Ukraine need for rebuilding itself?
I mean, there are a lot of assessments. It's very difficult to know because it's several $100 billion. We have been discussed, have been assessed by the World Bank, but of course it will depend on the outcome of the war, how long it lasts, and how much support Ukraine has for the time being, because the more we support Ukraine now, the less costly will be the reconstruction.
Right. What aspects need the most attention right now as far as reconstruction of the countries?
I mean, it's very important to keep key infrastructure going, so electricity network, transportation network, access to heating and so forth for the population to be able to stay, and for the economy to continue to function, you know, to have manufacturing, being able to produce and so forth. You need to have energy, electricity, transport, logistics. So this is key now.
Has there been any message that has gone from you to all the G20 leaders?
I mean, yes, this is a message we discuss a lot.
That's all the time we have on this special broadcast. Thank you for watching. Goodbye.